Welcome back to the channel. Today, we're diving into some eye-opening money facts that will change how you think about your finances. We're going to be looking at some statistics and trends that might surprise you, and hopefully, by the end of this video, you'll have a new perspective on your own financial journey. Whether you're just starting out or you're already a seasoned investor, there's always something new to learn when it comes to money. Let's kick things off by talking about financial literacy. It's a term that gets thrown around a lot, but what does it really mean? Why is it so important, and how does it impact our daily lives? You've probably heard the term before, but do you really know what it means? Financial literacy isn't just about knowing how to balance a checkbook or understanding how interest rates work. In a nutshell, financial literacy is the ability to understand and effectively use various financial skills like personal financial management, budgeting, and investing. It's about having the knowledge and confidence to make informed financial decisions. It's about making informed decisions with your money and building a secure financial future. Whether it's saving for a rainy day, planning for retirement, or investing in the stock market, financial literacy plays a crucial role. Now, you might think that most people have a pretty good grasp of these concepts, but the reality is far from it. Many people struggle with basic financial principles, which can lead to poor financial decisions. According to a recent study by the National Financial Educators Council, only 34% of Americans are considered financially literate. That's a shockingly low number when you think about the importance of financial knowledge in our everyday lives. That means a staggering 66% of people lack basic financial knowledge. This isn't just a minor issue, it's a significant problem that affects millions of people. Think about that for a second. 2/3 of the population might be making crucial financial decisions without a solid understanding of the implications. This can lead to a cycle of poor financial choices and economic instability. This lack of financial literacy can have serious consequences. People who don't understand basic financial concepts are more likely to make mistakes that can have long-term impacts on their financial health. People with low financial literacy are more likely to accumulate high levels of debt, struggle to save for retirement, and fall victim to financial scams. These issues can create a ripple effect, impacting not just individuals, but families and communities as well. They might not understand the importance of investing early, or the power of compound interest. Missing out on these opportunities can mean the difference between a comfortable retirement and financial hardship. But here's the good news. Financial literacy is something you can learn and improve upon. It's never too late to start educating yourself about money matters. There are tons of resources available online and in libraries, and even just watching videos like this one can help you gain valuable knowledge. By taking the time to learn, you can take control of your financial future and make informed decisions that will benefit you in the long run. Now let's shift gears and talk about investment trends. The landscape of investing is dynamic and ever-changing, influenced by a myriad of factors including technological advancements, economic shifts, and evolving consumer preferences. The world of investing is constantly evolving with new opportunities and challenges emerging all the time. Investors need to stay agile and informed to navigate this complex environment successfully. Staying informed about current trends can give you an edge and help you make smarter investment decisions. Regularly reading financial news, attending webinars, and consulting with financial advisors are just a few ways to stay updated. One major trend we're seeing right now is the rise of ESG investing. ESG stands for Environmental, Social, and Governance, and it refers to investing in companies that prioritize sustainability and ethical practices. This trend reflects a growing awareness among investors about the broader impact of their financial choices. More and more investors are looking beyond just financial returns and considering the impact their investments have on the world. They are seeking to support companies that are not only profitable but also responsible and forward-thinking. Another trend that's been making waves is the growth of index funds and ETFs, or exchange-traded funds. These investment vehicles offer diversification and low fees, making them a popular choice for both beginner and experienced investors. By spreading investments across a wide range of assets, they help mitigate risk and provide a more stable return. Instead of trying to pick individual stocks, you're essentially investing in a basket of assets, which can reduce risk and potentially boost returns. This approach is particularly appealing in volatile markets where individual stock performance can be unpredictable. We're also seeing a surge in interest in alternative investments, such as real estate, precious metals, and cryptocurrencies. These alternatives offer different risk and return profiles compared to traditional stocks and bonds. While these investments can be riskier than traditional stocks and bonds, they can also offer the potential for higher returns and portfolio diversification. For instance, real estate can provide steady rental income and long-term appreciation, while cryptocurrencies offer high volatility and the potential for significant gains. Of course, it's essential to do your research and understand the risks involved before investing in any of these trends. Each type of investment comes with its own set of challenges and opportunities, and it's crucial to be well informed. Remember, what works for one person might not work for another, so it's crucial to consider your own financial goals, risk tolerance, and investment timeline. Tailoring your investment strategy to your personal circumstances can help you achieve your financial objectives more effectively. Let's move on to a topic that's often overlooked but incredibly important: wealth distribution. In simple terms, wealth distribution refers to how wealth is divided among individuals and households in a society. It's no secret that wealth inequality is a major issue in many countries, including the United States. According to data from the Federal Reserve, the top 1% of households in the US hold more wealth than the bottom 90% combined. That's a staggering statistic that highlights the vast gap between the wealthiest Americans and everyone else. This disparity in wealth can have far-reaching consequences, affecting everything from access to education and healthcare to economic mobility and social stability. There are many factors that contribute to wealth inequality, including differences in income, education, inheritance, and investment opportunities. Understanding these factors is crucial for addressing this complex issue and creating a more equitable society. While it's easy to feel overwhelmed by the sheer scale of wealth inequality, it's important to remember that even small steps can make a difference. Supporting policies that promote economic opportunity, advocating for fair wages and access to education, and making informed financial decisions are all ways to contribute to a more just and equitable society. Finally, let's talk about something that affects us all: spending patterns. These patterns, often ingrained in our daily routines, can either build our wealth or slowly erode it without us even realizing. The way we spend our money can have a significant impact on our financial health, yet many of us are unaware of the unconscious spending habits that might be holding us back. These habits can be as simple as buying a snack every time we fill up our gas tank or always opting for the more expensive brand at the grocery store. One common spending trap is the latte factor, which refers to the idea that small, seemingly insignificant purchases, like a daily latte or takeout coffee, can add up to a significant amount of money over time. Imagine spending $5 on coffee every day. That's $150 a month, and $1,800 a year, which could have been invested or saved. While it's perfectly fine to enjoy these small indulgences, it's important to be mindful of how much we're spending on them, and whether that money could be put to better use elsewhere. For instance, could that daily coffee fund a weekend getaway or contribute to an emergency savings fund? Another spending pattern to be aware of is lifestyle inflation. This occurs when our spending increases as our income rises, often leading us to live paycheck to paycheck despite earning more. As we earn more money, it's tempting to upgrade our lifestyle accordingly, buying a bigger house, a nicer car, or more expensive clothes. These upgrades can quickly consume any additional income we earn, leaving us no better off financially. While there's nothing inherently wrong with enjoying the fruits of our labor, it's important to strike a balance and avoid letting our expenses spiral out of control. We need to ensure that our spending aligns with our long-term financial goals and doesn't jeopardize our future security. One effective way to gain control of our spending is to create a budget. A budget helps us see where our money is going and allows us to make informed decisions about our spending. By tracking our income and expenses, we can identify areas where we might be overspending and make adjustments accordingly. This process can reveal surprising patterns, such as how much we spend on dining out or on subscription services we rarely use. There are countless budgeting apps and tools available to help us simplify this process and make it easier to stick to our financial goals. These tools can provide insights, set spending limits, and even alert us when we're nearing our budget thresholds, making financial management more accessible and less daunting. Thanks for watching. If you found these money facts helpful, don't forget to like, subscribe, and hit the notification bell for more insightful content. Remember, Knowledge is power, and the more you understand about money, the better equipped you'll be to make informed decisions and achieve your financial goals. See you in the next video.